Today we're going to talk about your business tracking register. The idea of the business tracking register is to give you an idea of the money flow in and out of your business. It's not necessarily an exact representation of the money that is in your checking account for your business, but it should be pretty close. The goal of the business tracking register is to show you how to split the monies that are coming in through the sale of the product so that you're adequately saving 50% to restock your shelf. You're saving 10% for incidental items in section 2 and showing you exactly what your 40% profit is. Now, technically, yes, you do make a 50% profit, but what Mary Kay does recommend is that you're saving 10% so that you have enough to pay for section 2 items, you have enough to pay for mailings that you might want to send to your customers through the preferred customer program. We refer to that as PCP, and again, any other incidental items. Now, I will have, as well as the business tracking register, I also have an office expense sheet here that we'll be using so that you can place your orders as well. So we want to make sure that not only are we tracking the money that's coming in, but also the money that's coming out of your business. So what I'm going to do before we actually start filling out the business tracking register is give you an idea of some examples of retail cost and wholesale cost of the products that you're actually selling to your customers. Now, what you see on the screen is actually a copy of one of the pages in the flip chart that we use. You can see on the upper left-hand corner under the Queen of Everything, I've priced out exactly what the retail cost, which is the customer cost, and the wholesale cost, which is our cost as a consultant that we pay for those products. On the left-hand side, you can also see that I've put a little cheat sheet on what the retail tax would be on those particular sets if I was charging the sales tax based on my particular tax rate. Now, what I would suggest that you do is make a copy of this. Again, figure out what the sales tax would be based on your tax rate, because it's always based on where the product is delivered to you. The other thing that you want to do here is pay attention to the fact that the Queen of Everything set that is explained here, because it says a 237 value, where we get that 237 value, if you were to add up what is written here on the screen, it would not equal 237. What is built into that 237 is if someone were purchasing the liquid foundation, which is, you can see that the CC cream, the retail is 22, a liquid foundation, or CC cream is 20, a liquid foundation is 22. Also, what's built into that 237 is the value of the PCP gift that they would be receiving, because when they get the Queen of Everything set, that's the only time that with that very first sale that we do offer that gift with purchase for getting the full size set. So normally what I do, and it's totally up to you with this, but that's just kind of an incentive that I use, because once they make that initial purchase, if they buy anything less than the Queen of Everything set, they would not necessarily get that PCP gift. I enroll them in my preferred customer program, and then with their first reorder, they get the PCP gift. But with the Queen of Everything, I do give it to them up front. So you can see, though, we don't need to explain the difference in, this just shows a value with the CC cream. All they care about really is that they're getting this on sale for $189. They're getting a great value for $189. So then if you move over to the Princess set, I've done the exact same thing. The customer cost in retail, your cost as a consultant in wholesale, half. The sales tax cheat sheet in the upper right hand corner, and then going down to the basic set. Again, each one of these, the basic set, that $66 value would have been with the liquid foundation. The CC cream set, though, would have been $64. You can see I've got tax on $66 if it's the liquid foundation, tax on $64 right in the very center for the CC cream. So retail of this shown in the pictures is $64, wholesale is $32. So again, important for you to really start to understand the difference between retail, which is the customer's cost, and your cost. Okay, so we're going to minimize that. All right, the next thing that we need to do is bring up our sample sales slips. And what you will want to do is not only have a copy of these sales slips, but I also want to talk to you about the internet order that was placed for this first sales slip. So let's take a look at this. Marlene placed her order. It was a customer delivery service order. Now, again, when a customer places an order on your Mary Kay website, you don't necessarily have to write out one of these pink sales tickets. And there's a lot of extra information that's written on here that if I were sending this to a customer, I wouldn't have on here, but for purposes of training, I did need to write everything on here. Normally, if it was just for the customer, I would just write her name, the date, what she's purchased, that she got the gift with purchase at no charge. I'm not going to show the cost of that. I also would not show the ProPay fee. I wouldn't show customer delivery service shipping or the additional tax that was charged. It would just be a basic sales slip. Okay, so we're going to start filling out the business tracking register. Marlene placed her order on 6/25. Now, all I'm going to do is just type in her first name. This is for your records, so you really don't have to worry about last names and all of that kind of thing. It is a customer delivery service order. You'll notice there is a drop down in the type of transaction there. Now, the full retail cost of the product that she purchased was $129, and I got that figure from the sales slip over here. You can see retail value. There was no discount given on this order, so it was $129. So the retail sales tax on $129 is $9.35. $9.35. Okay. Now, the only time that you will record an item that you're giving away for customer for a PCP gift is when you're placing that order through Mary Kay and shipping it directly to the customer. Normally, if you're purchasing those gifts, it would come out of column G, that's 10% column, but we've got to account for that PCP gift on this business tracking register because it's not coming off of the shelf in your office. So I did send her the white tea and citrus mini, so the cost of that was $4. The shipping cost on this order was $5.75, and there was a ProPay fee because she did pay for this order on my website, and that ProPay fee was $4.23. So let's add in that ProPay fee of $4.23. Now, we do need to make sure with this particular order, again, because we placed this order from Mary Kay, that we are adding in the sales tax that Mary Kay charged for the order. So I want to show you the actual order that was placed. Let's do this. Okay, so when I scroll up here, you can see that the retail value of the product was $129. Now, what Mary Kay is required to do, this is not something that they want to do, but this is what the state requires. They do have to charge tax on everything that was sent to the customer, even if we didn't charge the customer for it. So that Satin Hands Mini, there's sales tax that was sent into Mary Kay so they can disperse it to the county that I live in. They also have to charge sales tax on the shipping amount over in the lower right hand corner over here. So you can see the total sales tax that Mary Kay had to charge was $10.06. Now, that's not what I charged the customer. I only charged her $9.35 because that was based on the retail value. I choose not to add those additional charges onto the customer's order. I figure, she's using my services. She could go to someone locally and not have to pay any kind of shipping charges, but she stays a good customer of mine because I don't add those charges onto her. So in this case, what we need to do is, instead of putting it in the non-recovered tax, what we need to do is we put it in the Section 2 tax column over here. That is the only time that you use that Section 2 tax column, because you're being taxed on the $575, the $575 shipping, and the $4 PCP gift. So the difference between the $9.35 and the $10.06 that Mary Kay charged me is the additional 71 cents. So when you put it over here, it adds to your expenses. Now what this does then, the only column that is not going to auto-populate is column S. So what you're doing is you're putting in the actual amount that you're collecting from the customer. You can see that the sales tax that I did collect is auto-populated, and then it breaks it down and it shows exactly what the 40% profit was on this particular order. Now what you need to do in this column is we actually need to go over into that profit or loss column and hit the drop down so that we can indicate that it in fact was a profit. Okay, so we'll look at the next sales slip up on the screen, and this was for Mary. This was a really simple transaction and it was a reorder. Nope, can't do that. Was going to type it in that way, so just hit reorder, and it was a $24 sale. The sales tax, you can see down on the bottom that was charged here was $1.62. So we'll take that back up over here. $1.62. There were no discounts given on this order at all. And if we go back down here, we can see that she paid with a check, so we don't need to worry about any ProPay costs or anything, so no expenses. So the amount that was collected from the customer was the $24. We collected $1.62, so the profit on this order was $9.60. So we're going to mark that as a profit. The next sales slip that we need to enter on our business tracking register is for Frankie. So let's put her name in. And this was, I'm marking this one as a facial because Frankie came as a guest to the sales meeting. Now the retail cost of what Frankie purchased on the bottom, you can see, was a clear proof set. So that was a $45 value. The retail value on $45, let's take a look at her sales slip. In the lower left-hand corner, you can see tax on 45 is $304. Now again, I've got some additional things that I added to the sales slip after I gave it to her. When I first filled it out, I only showed clear proof set, I showed the gift card discount, the subtotal, tax, and what she was charged. This other information that I've got here where it shows guest meeting, reorder at 50%, and then in the lower left-hand corner here, the non-recovered tax. All of that information is something that I wrote on the sales slip once I got home so that I could fill my business tracking register in with that. So what we need to do is we need to make sure that we're recording the different expenses, because I did give her a $10 discount for coming to the meeting. So by doing that, what we need to do is we do need to put first of all, the non-recovered tax. You can see $304 is what I should have charged. I only charged her $236. So the difference in non-recovered sales tax goes in this column right here, and it's 68 cents. So we'll put that in there. Now, the discount that I did give to her was less than 50%. And it's important that you make sure that you put it into this column, and I'll explain why that's important as we continue to go through this. But for right now, her discount was $10 retail on that. So what it's going to do is it's going to auto-populate exactly what the wholesale was, because that is the actual cost of that discount. Now I have to go over back to column E because I forgot to fill in the actual retail tax for this order. So we need to put $304 over there, because what's important about that, if you're not filling in that column, then you won't be saving enough tax, so that once you restock, everything in column F is your restock column. what will happen is you won't have enough saved to place that order to Mary Kay. So I went back and put that in, and we're just going to continue to move over. You can see the total amount that I collected from her. The subtotal that I collected from her before tax is $35. Plus the $236 in sales tax. So the profit on that particular order, even though I gave her a discount on it, was $12.32. So we'll mark that one also as a profit. Now we're going to go ahead and enter sales slips for a party that was held, and the hostess at the party was Sally. So before we even do that, what I want to do is I want to show you the hostess perk sheet. Now the hostess perk sheet can be found on our unit website. If you go to the training tab and then under party documents, you'll find this hostess perk sheet. Let's take a look at this full sheet filled out completely. You can see the date of the party. Now, this Hostess Perk sheet goes right along with the Triple Hostess Credit Program that I show to my customers, and that I show in new consultant training to our local consultants. What's important for you, no matter what hostess program that you have, is that you be able to show the hostess some type of a detailed listing of exactly what she's getting, so that there's not any kind of question later on. It makes her feel better, and it makes you feel better when you get home that you did everything right, and you can fill out your business tracking register and know how much profit you made as well. So let's go ahead. We'll take a look at this. Sally did have, she did get 25 for the guest list here. In credit. She also got a booking gift. Now the booking gift that I gave her for this party, the retail value on that product was $17. She got the compact mini that was unfilled. She also had 5 guests there who were over 21 and not currently Mary Kay users. You can see the 5 guests that were here. You'll notice that Sally's purchase is not included in this total because the total sales that Sally needed to have at that party was 400 or more. Now the sales that are recorded here are the sales that the customers made less any discounts. So you can see even Jane, she bought the Queen of Everything set. Now the retail value on that was $237, but I'm only going to record $189 here. You can also see that there were 5 purchasing guests at that party, not including Sally. So Sally does qualify for a 50% off shopping spree. Now what's important about the triple credit is a hostess needs to have everything in the top. The party sales have to be 400. She has to get 2 bookings and then 100 in outside orders to qualify for the 200 for free. But she only got 1 booking. Bev did book a party on 7/16, so I put the date down that party's going to hold, and there were no outside orders. So Sally's hostess program defaults to the 75 for 35, which is still a substantial amount of free product. Basically what she's getting is a $40 discount on $75 worth of products. So she's super excited about that because she gets the $75 worth of products. She still gets the 50% off shopping spree after her 75 for 35. She got the booking gift as well, and she's super excited about that. So let's go ahead and minimize that. Then what I want to do is I want to show you how I break her sales slips down into 3 different sales slips to make it easier on me to be able to fill out my tracking register and to show her that, again, she's gotten everything that she's due for free. So the first thing that I do is I fill out a sales slip just for that hostess gift because it's at no charge. I gave her the compact mini unfilled. The retail value of that is $17. My cost is $8.50. The sales tax would be the same here because, again, this entire amount, this $8.50 plus the sales tax, that is going to be a 100% tax deduction because it is considered a loss because I've given it to her for free. The second slip that we want to look at is her 50% off shopping spree. So we'll talk about that in a minute, but let's go to the 75 for 35 first, because what happens there, you can see she's got her clear proof set, CC cream, and liquid foundation brush. Okay, so let's start filling in Sally's information on the business tracking register. I am going to put that she was the hostess there though. And it was a party. So the retail cost of the item that I gave her was $17. The tax on that was $1.15. You can see the restock value is $8.50 plus we need to save $1.70 in the section 2. So as we move over, what's important here is because we have given that product away, go all the way over to column P. You can see wholesale cost of product when the discount is 50% or more. We do need to put the wholesale cost, that $8.50 in this column. I also need to record the non-recovered sales tax that I did not collect of $1.15. Now I'm going to put the subtotal in here. Actually, I don't put any subtotal in here because I didn't collect anything for this. But what we need to do in order to make this auto-populate and calculate correctly is we need to indicate that this was a loss for this because, again, no tax was collected. There was nothing collected from the customer as well. So it shows you that the $8.50 plus the $1.15 was a complete loss out of that 40% column. Now, the reason that it is a loss from that 40% column is because you've given it away for free. Anything you give away for free is automatically deducted from your profit because what has to happen is you still have to be able to restock that product. You look at column F, you've got $8.50, and column E, that $1.15 in sales tax. So that has to come from somewhere, so it came from your profit column so that you can restock your shelf. You'll notice that we don't save anything in that 10% column when you've given something away for free. All we're concerned about is just restocking that so your shelf doesn't continue to have less product on it. You need to be able to keep your inventory at an adequate level. The next sales slip that I want to enter is for Sally, 75 for 35. So the retail value of that product is $75, and the sales tax that should have been charged on that was $5.06. But I didn't collect all of that from her. So there will be some non-recovered tax that we'll record. When we move over to the non-recovered tax column, you can see that we are actually going to enter $2.70 because the difference, if you look at the sales slip in the lower left-hand corner, the difference between the sales tax that was actually collected from her and what Mary Kay charged me up front was $2.70. So let's put that in the non-recovered tax column. Now, the discount that I gave her was less than 50% of the value, the retail value of the product. So I'm going to put the $40 discount in column M. And it auto-populates over and shows exactly what that discount cost me. You can see the total expense. Over here, I'm putting the retail value of what I collected from the customer here. And you can see it shows the appropriate sales tax and then my 40% profit. So let's mark that as a profit. And we'll go to the next sales slip. Now there's a couple of things that are a little bit tricky on the next sales slip that I want to show you. And the first thing that we want to do though is we want to put in the exact retail value of the product that came off the shelf, even though she got it at a 50% discount. So it was worth $82 retail. The tax on $82 was $5.54 that was prepaid to Mary Kay. It splits everything out in column F and G so that we're saving to restock our shelf. Column H is just a total of those two, but then we need to start putting our expenses in. And those expenses are what you gave away at 50% off. So what we want to do is we want to go over into the non-recovered tax column Now, normally what you would do is you would put the amount. You can see the 554 minus 277. The difference is 277 in non-recovered tax. But here's a little thing that I have a tendency to do all the time. And if you make this mistake when you're figuring out your sales slips, I want to show you a good fix for it. If you look at the sales slip, you can see I wrote down the retail cost of $554, and then I put over in this column, I did put the $277 sales tax. But look what I did. I subtracted $277 from the $41 that I charged her instead of adding it. Now, I already got the money from Sally. I'm not going to go back to her at a later time and say, Sally, I didn't charge you appropriately for sales tax and you owe me another $2.77. What's done is done. I'm just going to write it off as a full deduction. So what I'm going to do is I'm just going to write off that full $5.54 as an expense, rather than go back and let her know that I didn't add that up correctly. So that's just, you know, if you're like me and you make mistakes like that occasionally, the good news is we fail forward in this business. And because it's a deduction, you're really not losing on your taxes. So then we want to go over to column P because this was a 50% off discount. So we're putting the $41, the retail value of that, over in that particular column. Actually, it's not the retail value, it's the wholesale value. Over in column P, you can see it calculated all of the expenses. It's $46.54, and we need to go over here because it's still showing that we made a profit on it. But once you change this, it shows the loss of $46.54. Now, what I want you to pay attention to is the fact that you didn't lose $46.54. What you did is you deducted it. That is simply a deduction from your profit, because technically broke even, basically. Because what you did, all you're doing is you're taking that $46.54 and you're moving it all the way over here to the left. You can see where you've saved $41 plus the $554. So you still have that money. It's not that you lost money. You have the money. You're just putting it in a spot where you can restock your shelf appropriately. Now we're going to start entering the sales slips for the guests who came to Sally's party. So the first guest that we want to enter information for is Janet. And Janet's order was pretty simple. You can see that she bought a foundation primer. Now, she did pay with a credit card, so there was a pro-pay fee here, and the sales tax on her order was $1.22. So let's go ahead and work on this over here. We'll put in the retail value is $18. The sales tax was $1.22. And then there was a pro-pay fee. Let's go back to the sales slip. The pro-pay fee was 85 cents. No other discounts were given. Take a look at the sales slip. No other discounts were given. So when we come over here, the total that was collected from Janet was $18. Sales tax of $1.22 shows a profit of $6.35. We'll mark that as a profit and move on to the next slip. So Julie actually got one of the basic sets off of our set sheet. So what we need to do is we need to put the retail value of the set that she purchased, because she got the set with the CC cream. So what I did, I put the 64 and then the tax that should have been charged was the $4.32. $4.32. Okay. Now she did pay with a check as well, so there were no pro-pay fees. And again, I don't have to put this CDS gift with purchase. She doesn't get a gift with purchase here. Don't confuse yourself with any of that. But there is some non-recovered tax that we do need to record here for Julie's order. Plus, Julie did register on my website ahead of time, and I do give my customers a $5 discount discount that they can use the day of the party if they pre-register on my website. Because what's important to me is that just saves me the time of getting all of their information into my customers. What is also nice about that, it allows you to be able to check out on the new My Customers Plus app. And the reason that we are charging the sales tax based on what we actually charge the customer at the discounted price is because in that app, that's how the sales tax is figured. We just found out recently that we had been charging the sales tax based on what we purchased the product for from Mary Kay, which is not something we were supposed to be doing. So now we are doing it correctly. So you can see some additional information that I put on this slip, again, once I got home, was the total discount that I gave her, because difference between the set was $64. She actually paid $60 as the special price at the party. So there's a $4 discount you can see on the right hand side here, plus the $5 registration fee. So on the lower left hand column, she got a total of a $9 discount. Now the difference in sales tax, it should have been $432 and $371 was actually charged. So the difference in sales tax is 61 cents. So let's put that 61 up here on the spreadsheet in the non-recovered tax column. And then we're going to put the $9 because it was less than 50% in column M. It auto-populates over and shows you what the cost of that at wholesale is. So the total expense on that particular order was $5.11. Now, what I collected from her was $55. It shows $371 was also collected. It shows the 40% profit on that particular order, and we're going to mark that as a profit. Now we want to put in Bev's order, and Bev's was pretty simple, but she also did register on my website. You can see down here. She paid cash, so there's no ProPay fees. So the total retail value of her purchase, she bought a mineral powder foundation for $18 is the retail cost. The sales tax on $18, if you look at her sales slip, is $1.22. So what we need to do is we need to make sure that we're recording the difference in the sales tax over in the non-recovered tax column. You can see $1.22 is what we should have put on this order, but because she paid the 18 less 5, she paid $13. That was only 88 cents. So the difference between the two is 34 cents in the non-recovered tax column. We'll put that there. We also need to record the $5 discount that she was given in the next column, column M. It shows what that actually cost me, the $2.50. So what was collected from her over here is $13 plus the 88 cent tax. So the total profit on that order was $4.36. Now we want to put in Jane's purchase. Gonna fix the name over here. Now with Jane's purchase, Jane actually bought the Queen of Everything set. Now don't forget that the retail value on that set is $232 when you add up these particular figures here. But she did get that gift with purchase as well. So what I did is I had to figure out the sales tax on $232. Now all of these figures that you can see here that I've written, that miracle set price, all of that, that retail cost, I don't write all of that on the sales ticket when I'm there with the customer. All that she's concerned about is this $189. So I'm just going to write Queen of Everything and then $189, but I am going to list out these other items underneath it so that later on when I get home I can figure out what the retail cost was and the sales tax tax. So also you can see on the sales slip I put the cost of the mini satin hands because it is an expense, and then the total discount that I gave her. The difference between the $232 on the sales slip and what she was actually charged is $43. So let's go ahead and start filling that in. So the retail cost of the product that came off of my shelf was $232, and the sales tax that is worth is $15.66, saving it so that when I reorder that, I'll have enough to reorder that product. Then what we need to do is we need to start filling in the expenses for that order. So the difference in actually what was charged for sales tax is $2.90. So you can see $2.90 goes in the non-recovered tax column. The discount was less than 50%. It was a $43 discount. And you can see that on the sales slip here. The difference between $232 and $189 is $43. So it's going to auto-populate that out. We want to go over, it shows the total expense, $24.40. I collected in this column S, I collected $189 retail from the customer plus the sales tax. There was a profit on a Queen of Everything. You're making $68.40 on that every time you sell a Queen of Everything set. The last sales ticket for the party is for Annette. So let's go down here to Annette. And Annette bought a miracle set at the party. It wasn't at a special price. She didn't want the CC cream. Sometimes you'll get customers who, it doesn't matter even if it's only $4 more, the $99 set, they don't want it. They won't wear the CC cream, so she got a firming eye cream instead. So she paid $95 for the miracle set. Now she also paid with a credit card, so there's a pro pay fee there. So we need to put the full retail value of her product in the next column. Let's move this up so we can take a look at it. And it was $127. The tax on $127 is $857. Going to calculate everything out. The only thing that we need to do is we need to add in the pro pay fee on this particular order. Now that we've got all of the sales slips on the tracking sheet, I want to go over the totals with you. So let's take a look at the very bottom. You can see the total retail value, column D, of all of the products that came off of the shelf or were ordered from Mary Kay is $831. The retail tax is $56.75. Column F, what we're saving to restock the shelf is $415, and you've got $73.20 saved for Section 2 items. Now, what's so nice about that is when you place this order, column F, of $415, you've got way more than you need to buy Section 2 items. So what's nice about that, I'm going to encourage you, don't go crazy buying a lot of Section 2. Usually you want to make sure that your Section 2 cost isn't more than 10% of what you're actually going to be ordering from Mary Kay. So at retail cost, so you've got way more saved than what you're going to need. So leave it sitting there so that you've got enough in that savings account so that you can enroll your customers in the preferred customer program. That's the best way to keep your name in front of your customers all year long. So the total that has been saved is $488.70, and then all of your expenses total down on these columns. So you can see your total expenses, again, that are a write-off are $136.62, and you can see what you collected from the customer, and then again what your profit is at the end of the week. Now, what I'm going to encourage all of you to do, if you haven't done this, you really need to do this like as soon as possible, is you've got to put a budget together so that you know what you're paying out of what you're collecting through the sale of your product. The first thing that you want to do, if you do owe on your inventory, if you have some type of a loan, whether it be a credit card or something from a bank, you make a payment on that first, just like you would on your car note. If you were working another job and you get your paycheck, the first thing that you do, most of us do, is we just pay those bills. So the first thing that you pay is on your inventory, and then any other expenses that you are budgeting for your business, whether it be internet charges or anything that you want to put into that budget. And then after you pay your bills, whatever's left over is your profit that you can put into your household income. So you can see, obviously paying your expenses first is important, but not just paying yourself that $156 thinking, oh my gosh, I've got $156 I can take and just go shopping, before you actually pay your bills. What this also does is that this prevents you from using all of the money that you think that you have on a lot of extra little things that you don't need for your business right away. Eventually you will, but right now you don't. So you can see down at the bottom here, we're going to bring up our expense and restock order sheet. So I'm going to click on that, and the first thing that I'm going to do is I want to put, let's go to the top, we're going to put in today's date. So today is 7/2, and I am going to place an order to Mary Kay. And I want to restock my shelf. So how much do I have that I can do that? $415.50 is what I have available. So I'm going to go over here, and I don't order all of that right now. So I'm only going to order 400 right now. Normally what I do, if I've got that money to restock my shelf, I just restock exactly what I've got. The only time that you may want to be using more is when you are actually building your inventory. If you started at a lower level than just a full inventory, what you need to do, if you continue to just restock at 50%, your inventory is not going to grow. So what you will need to do is you'll need to be deducting some extra monies from your 40% column and adding this so that you start to build that inventory and you have more on hand to be able to service your customers. The reason that it's important to have more on hand isn't so that you stockpile it. You have more on hand because as your customer base grows, you need more on hand to be able to service those customers. So for right now, I'm just placing an order of 400. Now, as far as section 2, I only need $25 in section 2. So you can see right here what this does is you can see the totals at the bottom, this $15.50 and the $48.20. The reason that those are like that is because if you go back to the 60/40 column over here, what happened is it shows the expenses deducted, the 400 and the 25. So it gives you a running total of what you have left to be able to use if you wanted to use those monies. Now, what I need to do is I need to make sure that I make a payment on my inventory as well. So what I'm going to do is I'm going to open up the office expense column, and my payment is due this week. So I'm going to enter this and my payment on inventory. That comes out of the profit column. Now my payment is $100. There you go. When you look at the bottom, it shows that the money that I have left to be able to use out of what I've collected this week is $56.18. Now you can take that $56.18 and buy additional business supplies, cotton balls, all of those kind of things, or if you need to put it into the family budget, you can do that. So let's go back to our 60/40 split, and you can see where it actually gives you a running total and deducts this. So it's super simple to be able to use. So let's go back to this office expense tracking register here. And I want to place an order to actually get some things from Pink Printing. Just some little thank you notes for my customers. So those are going to cost me $12.15. Again, they come out of the 40% column. They don't come out of this restock column or even out of the section 2 column. It comes out of profit. So it takes it down to $44.03, what I have left. We'll go back to our 60-40 split, and you can see exactly what my expenses were on the top based on the parties, and then the office expenses at the bottom. So just to conclude, do you have to use this business tracking register? No, you don't have to do that. I know a lot of people who don't balance their checkbook. It's totally up to you whether or not you do that. But if you want to know where the money's going in your business, or you ever get to a point where you feel like, oh my gosh, am I really making a profit here? You are, but you've got to be able to see it in print to actually make sure that you're doing it correctly. So I do encourage you to get this filled out. Now you can see from the amount that you actually had come off of your shelf and this restock column, what you paid for it, that $415. When you look at that and then all of these expenses, what your actual profit was, what I'm going to encourage you to do, I don't want you to feel like, oh my gosh, I'm really not making that much on this. You are. Where you're going to make the majority of your profit is in that reorder business. So your follow-up with your customers and keeping them good customers in the future is where you make the most out of your profit. So you might be giving them a discount up front just to get them on the product and using it, but if you're taking good care of them year after year, that profit for the time that you put in when you just get a text message or they place an order on your website, that's just money in your pocket there with very little expenses. So have fun with this. If you have any questions, just let me know, and hopefully it all makes sense.